to help you put all the pieces of your retirement puzzle together in one easy to see picture. My name's Chris Maxey, and with me is my co-host Sean Clark. Sean, how are you?
Good morning, Chris. Yeah, it's good to be here. You know, when people come to our office, I say this every week, but oftentimes the first question we ask is about their plan. Tell me about your retirement plan. And oftentimes they'll start to tell us, oh, I have an IRA, or I have a pension, or I'm going to take Social Security at age 65. And those are all pieces of the puzzle. But what we find is that most people don't have a comprehensive plan to pull all those pieces of the puzzle together into one holistic, comprehensive plan, a picture on the box, if you will.
You're definitely right. We see this all the time. People have put money year after year after year after year into their 401ks or their IRAs or what have you, but they're not sure how to get those funds out, and they're not how to get those funds out with the best possible manner. Meaning you have Social Security, you have a 401k, you have an IRA, maybe you have a Roth IRA, you have all these different accounts that have different amounts in. Well, what makes the most sense as far as for tax purposes, for investment purposes? What makes the most sense, and how do we get those out effectively? That's where a plan is really helpful for you.
Yeah, and the accumulation phase of life is a lot different than the distribution phase. The accumulation phase, where you're earning money and you're funding your lifestyle with your income, is a lot different than the distribution phase, where you're funding your lifestyle with your investments. So that's one thing that we're going to look at today, is the investment side of a plan.
Yeah, so we actually have a conference going to happen here shortly, and it's actually in Las Vegas. So this guy gave us the, I guess you could say the idea to do this show, and we're actually going to talk about day trading today. Can you trade your own stocks, and is it a good idea?
Well, that's a great question. I mean, you know, if you have friends that do day trading and they've talked about trading stocks, getting in, getting out, oftentimes you hear the miraculous stories, right? I bought this stock for $5 and sold it for $25.
Oh yeah, big win.
Yeah, huge win. I've made thousands of dollars day trading.
I bought Tesla at $5.
Yeah, you hear it all the time. And what we see is that the actual story from day traders is the statistics tell a completely different story.
A whole nother story.
In a study from 2016, according to El Toro, it's a stock trading platform, 80% of day traders lose money.
Wow.
80%.
Wow.
That is a huge number. So you asked me a question, can you trade your own stocks? Is that a good idea? Well, according to the statistics, 80% of day traders lose money. And not just a little money, 80%, the median loss in 1 year is over 36%.
That's incredible.
It's a lot.
We just had a fantastic market year, and it was 31, 32.
Yeah, market was up over 30%.
And the average person is losing over 36% a year as a day trader?
Correct.
That's staggering.
Yeah, it is a staggering statistic. And so, yeah, I was actually watching a video on YouTube, and I get hit while I'm watching this video with 3 different ads for guys telling me that they can help me get rich. Day trading. We're the best. I've got a proven track record of great success day trading. I'm going to show you the stocks to buy. We're going to trade options. We're going to do all this stock trading, and you're going to get rich because I'm going to show you how.
Well, who's got the time to do all that?
Well, no kidding, who's got the time? But listen,
who are these people?
As I get a little bit older, what I'm learning is there is no get rich quick scheme.
No, there's not.
Yeah, a few people have done it, and they say, "Oh, I can show everybody," but how much of that is luck, and how much of that is skill? And for the average person who's working a full-time job,
you got a family, you got a full-time job, you have friends, you have other commitments, and now you're tacking on day trading, in out of these stocks.
Yeah, and it's not only just watching the market. It's not only just watching the market and trying to figure out when to get in and when to get out, but you got to know these companies. And that's what we see oftentimes, is that the average investor is not doing the proper research to figure out what companies have a long, steady track record. No, they're just reading an article and jumping in. And almost the worst thing can happen is if they have success early, it's like gambling. They just get hooked.
Yeah, we hear this all the time. No, I'm independent. I'm day trading. I'm trading my own. I make my own rules. But really, what people are doing is they're following other people's guidance, right? They're reading somebody else's tips. They're watching other people's YouTube videos. So they're getting information from those people, but they think that they're doing it all themselves.
Yeah, and day trading, it is really close to gambling. It is just really close to gambling, and people don't plan to lose. People don't plan to lose at all in gambling, right? I mean, I think you go in with being optimistic, but people do it all the time. It's definitely a dangerous game. If you play with fire, you're going to get burned. And there's a reason why the Hard Rock Casino just continues to build and build and build. It's probably because they're making some money.
Yeah.
Would you agree?
Oh, absolutely. Yeah. If I go, I don't do hardly any gambling, but like I said, we're going to Vegas, and I consider if we do some gambling, that's just a donation to build those empires
to the
there,
Vegas
right?
gambling.
That's right.
Absolutely. Yeah. If you start gambling, you just better plan on losing it all.
And if you're gambling, I mean, I guess you gotta have some sort of discipline. I'm going in with this amount, and I'm trying to take this much amount out, or if I lose this amount, okay.
And that's something to think about. And I think that's a solid principle when we're talking about day trading. If you're interested in trading stock and you have some of your net worth that if you lose it, it's not the end of the world, maybe you peel off $3,000 to $5,000, whatever that is for you. If you're only worth 10, that might not be a good idea. But you peel off 2 to 3% of your total net worth for day trading to experiment and try it.
Yeah,
but
it should be fun.
Should you trade your core retirement investments?
It's a dangerous game.
Especially when 80% of people lose money and the median loss is 36%. So, hey, you give me $100 and I'll give you back 36% less than that. That's what often the result is of day trading.
I'm not interested in doing that.
No, I wouldn't expect you to be.
It's a wild thing. And that's where, it can be fun and it can be exciting. So yeah, carve off a small portion, money, a portion that you can play with and have some fun, right? We kind of call this sandbox money. Lots of times we have folks that come in and who watch all the business and all of the CNBC or whatever. They watch these different shows to see what's happening in the market, and they want to stay up to it, but they don't want to trade everything. And we say, okay, let's carve off a small portion. Let's let you play with it, and let's let you have fun, and you're invested. And it's not gonna, if you lose 36+%, guess what? That's not breaking the bank. That's not killing you, but you're still actively involved and you're engaging, and maybe you have some terrific wins.
Yeah, I mean, and that's honestly what people talk about was their wins. And do you remember, Chris? Remember when Bitcoin was all the rage?
Oh yeah.
And people are still talking about it a little bit, but yeah, I mean, if I invested in Bitcoin 10 years ago, I could retire now. Well, here's the thing: by the time you hear about a stock, by the time that people are talking about it, it's too late. Yeah. That stock is hitting all-time highs. And that was what we saw a lot with Bitcoin, was that people were buying in when it was all the rage, and that price shot up, and they were buying super high. And most of my friends that bought Bitcoin lost money.
Or they're still holding on to it, waiting for it to rally.
Oh, it'll come back. When Amazon starts using Bitcoin, that'll come right back. Well, maybe not. It's a risk. There's always risk with investing, but that's when we look at, leaving it to the professionals.
Hey, if you're hearing anything on this show, if you're day trading or if you don't have any idea how you're invested, reach out to us for a complimentary consultation. You can sign up to speak with us. You can reach us by phone at 813-502-1228. Again, that's 813-502-1228, or check us out online at brookstonefinancial.com. That's brookstonefinancial.com, or you can see us on Facebook at Brookstone Financial as well. That's where, those are easy ways to get a hold of us. Oftentimes people will reach out and ask certain questions that we're happy to answer. And lots of times we're here to assist you and to give you the information that you need to have a successful retirement and to make sure that you are doing the things that you need to reach your specific goals.
Yeah, that's just it. So we'll be right back after this short commercial break talking about day trading or not. Talking about day trading. Is it a good idea, or could it be potentially very harmful for your retirement plan?
Okay, welcome back to Money Puzzles Live. My name's Chris Maxey, and I have my co-host here, Sean Clark. And today we are actually talking about day trading. Is it a good idea? Is it a bad idea? Are there big winners and are there big losers? Well, in fact, there are big winners, but there are a lot of big losers out there. Statistics are showing. What are those statistics again, Sean?
Yeah, 80% of day traders lose money, and the median loss in 1 year is 36%. 36%.
One of the best market years we've just seen was 2019, and it was up
over 30%.
And the median loss is 36%. That hurts a lot.
Yeah, so is it a good idea to be trading your own accounts? And listen, if this is your full-time job and you watch the markets and you understand these companies and you can look at their earnings and project and see what they're going to make and see how much their stock's growth is going to be, then maybe you are capable of trading your own stocks. But if you go, hey, you know what? I buy a lot of stuff on Amazon. Maybe I should buy Amazon. Is that a good idea or not? I don't know.
Well, like you just said, people have families, they have work, they have a lot of obligations, and for them to do all this research for themselves and figure out what's the best place to put your money and what are the earnings of the company, what's the leverage on the company, what are all these what's happening in the economy, all these different factors that lead to a good or a bad purchase. These are things that professionals are always doing. And for someone who is working 40 hours a week or plus and has a family and has these obligations, that is a really difficult thing to do.
Absolutely. And people are getting really confident right now because the last 10 years, you could really just throw a dart at the wall and you were making money. I mean, every stock's been going up. Everything goes up in a rising tide. All boats rise in a rising tide. And that's what we've seen in the last 10 years is that the market has been on fire. The longest bull run we've seen in history, meaning a bull run, meaning that the stocks just keep going up, keep going up, keep going up. So what we see oftentimes is that, yeah, if you bought Amazon or Facebook or Google or Apple 5-10 years ago, you'll think that you're the best investment advisor. You think you're the best stock picker, the best financial advisor out there.
Yeah, you're definitely right. And when it comes to getting my truck worked on, I could do it. It could take me a whole Saturday. It could take me some cussing and swearing and having a real bad attitude. But I could probably maybe get it done.
I've been a part of seeing this.
Oh, you've been a part of it. You know it. I could maybe have the right tools in place, or maybe have to go buy a few tools, or I could just take it down to the auto shop and they could get it done in 2-3 hours. I'm going to pay more, right? There's going to be a cost to it, but I get to focus on what my specialty is. I get to focus on what I'm good at, and they get to focus on what they're good at, and they can get it done correctly. And I don't have to worry about all the issues that I might have caused along the way working on that thing.
Absolutely. And Chris and I are in the business. We are financial professionals where we do this every day. We primarily focus on retirement planning. We focus on the planning side. And again, we're talking investments every single day. And Chris and I don't even trade our own accounts. And it's for this reason. I don't have time to be meeting with clients and doing this show and watching the stock market every second of every day.
Yeah, it's our goal to meet with clients and to figure out what their goals are, to figure out what they need to do to retire well. And if I'm having a conversation with one of them and trying to learn more about them and their needs, and I'm also keeping another eye on the market and all the different investments I have, I'm going to do a terrible job either picking the stocks or figuring out what this person needs and how I can service them well. You can't do both.
Yeah, that's right. And we use some of the best in the business to manage our stock portfolios. And so our investment portfolios are invested exactly the same way that we recommend to our clients. And we just think that that's the best way. I mean, I'm not telling my clients to put their money in something that I wouldn't do myself. And so our money is managed, our personal assets are managed exactly the same way as our clients, and the exact same investment managers as our clients.
Yeah, that's definitely right. I mean, I could read a handbook about heart surgery. I could even do a little research on heart surgery and watch some YouTube videos on heart surgery. But do you want me doing heart surgery?
Not on me.
I don't want to do it on you either. I mean, this is you want somebody who has the research. You want somebody who has the education, who has time, effort, who has residency, who has all of these different things put into place to make sure that they know exactly what they're doing and they know how to do it effectively.
Yeah, when we're talking about a medical condition or going in for surgery, obviously that's a easy fix. But we find when we're talking about people's finances, and especially over the last 10 years, I mean, my goodness, the market has been on fire. And when that happens, you're making money. All of a sudden, you start to get overconfident. You start to think, wow, I'm really good at this. And it's this false confidence. And what a lot of people are forgetting is what happened in 2008, what happened in 2000, 2001, 2002, when the markets began to fall. And then they forget how much that hurt back in 2008.
Yeah, oh yeah, you're definitely right there. I mean, that hurt immensely at the time, right? However, you have small win after small win after small win. You get more bold, you get to a point where you don't even remember that. And that hurt a lot.
Yeah, so people are, and oftentimes when you're day trading or you're just trading your own stocks and you buy one and it does well, you get this false sense of, oh, I'm doing this. This is because of my skill and my ability. And people are forgetting what happened in 2008 and what's going to happen with these growth mutual funds, not growth mutual funds, but growth stocks. If we see a correction, I mean, markets are hitting all-time highs, and we've been talking about it a long time, but could we see a correction soon? I think that could we see a correction? Definitely, at any point, because markets are hitting all-time highs, and we are overdue for correction. And if they correct and you're trading your own stock, I mean, I heard it in 2008, people lost their life savings if they were day trading in around 2008. And, most people lost half of their retirement income. But if you're investing into risky stocks and day trading and even trading options, well, you're just gambling. And if we see a market correction, it's going to be detrimental.
So what are some proven methods to do well over the long term?
Yeah, like we talked about earlier, get rich quick schemes. I can make you $1 million a year off of $5,000. Look, I did it. You can do it too. That's probably not realistic. The proven track record, I think, many radio personalities like Dave Ramsey would agree. You invest a little bit each paycheck. You invest a little bit each year into the market. He recommends growth stock mutual funds. That may be a good idea for people in the accumulation phase. Once you get to retirement phase, that may be a little bit different. But the proven, time-tested, long-term investing method is putting in a little bit of money each and every paycheck into your 401k, into your IRA, into your Roth IRA, into your Roth 401k, investing a little bit each paycheck. And what's happening when the market's going up and down, the market's volatile, it has always been volatile, and it will always be volatile. But when you're putting little dollar amounts in, a little at a time, yeah, sometimes you're buying high, but sometimes you're buying low. And if the market continues on this upward
trajectory,
thanks, Chris.
You got it.
Then what you're doing is you're buying at an average lower cost. And that is the proven, time-tested way to build wealth is by investing small amounts at equal intervals, whether 2 weeks or once a month. Right. You're just buying in a little bit at a time.
Yeah, a lot of people get paid, every 2 weeks, right? So carve off a portion of those funds where, okay, you have a portion going to your spending, your living, and then maybe that's 10, maybe that's 15, maybe that's 20%. if you're really, really active, and you put that in, and that is working for you every 2 weeks or every month or whenever you get paid.
Chris, the bottom line is you need a plan. You need to project out 5, 10, 25, 30 years and see if you are saving enough to hit your number so that you can retire. I think Chris Hogan's right. You need to stop looking at retirement at an age of when you can collect Social Security or Medicare and look at it as a number. When I get to this number, I can just draw off my investments and I no longer have to work. And we can show you how to do that. We can figure out what your number is, and we can figure out exactly what you need to save to get to your number so you can retire at age 45, 50, 55. How much do you need to save to earn the income that you need to get to? So listen, call us at 813-502-1228. Again, that number is 813-502-1228. You can also visit us online at brookstonefinancial.com and click the link, Let's Get Started. And we would be happy to send you our taxes and retirement guide. We can email that to you.
Hey, thanks for listening. We'll be back here next week at 8 a.m.
All right, let's see how it sounds.
Hello and welcome to Money Puzzles Live. We are a new show here on Money Talk 1010, and we are
Probably stop
designed
saying we're a
to
new
help
show.
you put all
Yeah,
the pieces
I
of
know.
your retirement puzzle together in one easy-to-see
Thank you
picture.
anymore.
My name's Chris Maxey, and
Now we're
with
over.
my co-host Sean Clark. Sean,
All right, what? Let's
Yeah,
see.
Can we get a copy of this?
Yeah, I got one. I got one.
She already got one?
Yeah.
She got one?
Yeah, you go. There you go.
Well, let me delete the.
This is it?
Export audio.
No, go on the backside.
There's no
How
backside.
this?
Oh.
You can go.
Oh my, this is the Bill Metzger story, and that's it.
I don't even know what's on here.
We talk a lot about him.